how do you find your daily bias? I think this is a very important video because it literally just tells you whether you need to long or short the market, and there's tons of different ways on how you can determine your daily bias, but I'm just going to give you my step-by-step approach on how I find it. So first of all, I want to tell you guys that I do this based pure on price action. I don't use fundamentals. It's just all on the chart. So first off, we need to know what highs and lows are. It's very simple, of course, but we just need to get back to the basics to understand this full video. So what is a high? A high in the market is a upwards candle and then followed by a downwards candle, and the low in the market is a downwards candle followed by an upwards candle. Very simple, right? But what is the high right here? The high right here is the highest of these 2 points, and the low is the lowest of these 2 points. So for example, this is very abstract. Let's show this in the markets. Where are these highs? This is a high, this is a high, this is a high, this is a high. Why? They all have an upwards candle followed by a downwards candle, an upwards candle followed by a downwards candle. It doesn't matter how big, small, how long or short the wicks are. It's just an upwards candle followed by a downwards candle. And let's see, this is an upwards candle and this is a downwards candle. So the high is not this right here. The high is this, because this is the highest of the 2 candles. And for same thing for the lows. Where are these lows? It's a downwards candle followed by an upwards candle. This lowest wick is the low. Where are the lows? Lows, 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 because they have a downwards candle followed by an upwards candle. So very, very simple. So we also need to understand for the daily bias video how we define a break of structure. So what is a break of structure? A break of structure is when a candle closes above one high or below one low. So where are these break of structures, right? So the low right here is basically here. This is a low, right? Because we have a downwards candle followed by an upwards candle, and we take the lowest wick of the 2 candles or body. This is the lowest wick. So this is the break of structure. So as you can see, the candle closed below the low. So this is a break of structure to the downside. Just the same thing to the upside. So as you can see right here, for example, you can see it everywhere. This is a high. Why? Because we have an upwards candle followed by a downwards candle. Then we just take the highest wick of this high. This is the high. What we see here, we have a break of structure with this candle of the high. So this is an upwards break of structure. So now we know what highs, lows are, and break of structures. We can determine our daily bias based on pure price action. So this all, you can find break of structures, highs, lows on all time frames. But for my daily bias, I base it pure on the daily time frame, of course, but also on the weekly. I'm going to show you that, guys, right now. So we are on the daily time frame on Euro USD. What are we seeing right here? First thing I do is I check the most recent high or the most recent low. So as you can see here, where are the highs and lows? This is a high, this is a low. Let's just delete this for a second. So we have the low of the daily time frame, we have the high of the daily time frame. Why is this a low? Down, up. Why is this a high? Up, down. So what do we see here? The low gets broken, and if the low gets broken, that means the daily is bearish, meaning I have a daily bearish bias, meaning I am only looking for shorts based pure on price action, right? So let's say we broke structure with this high, then I'm only looking for longs. So let's go to other pairs. What do you see here? The same thing. This is the low. We broke structure with the low because the candle closed. Of course, the day is not over. So let's say the day ends up closing right here, and this is just a wick. Then this doesn't count as a break of structure. We need the full candle to close below the low or a full candle close above the high. So why do I also take into account the weekly? Well, as you can see, based on pure price action, what we just learned, we close below the most recent low. And it's very important to notice that I only use the most recent high, low. I don't care about this high or this high or this high or this low or this low, this low. No, it's just the most recent daily low or the most recent daily high. whatever gets broken, that's my daily bias. But where does the weekly time frame come into place? So basically the weekly, I don't care that much. It's only just for giving me like a perspective about the market. So here the daily bias is bearish, so I'm only looking for shorts. But I see that if we go on the weekly time frame, we are basically if we take the Fibonacci from this low to this high, we are basically like way below the equilibrium level. So we are just retracing basically on the weekly high time frame trend. So that says to me, okay, yes, I can still short because the daily bias is bearish based on pure price action, but I gotta watch out because on the weekly we have this demand zone and we are retracing already for a few weeks. So we can expect some upside later. So for example, if the weekly was trading right here, I was more interested for shorts because we didn't retrace to the 0.5 level all the way. But now it's a little bit oversold on the weekly, so that's why I'm a little bit cautious, but I'm still only taking shorts. So that's it. Really easy for determining your daily bias. I only use the daily price action highs, lows, and breakout structure to determine my daily bias. The weekly is just for giving me a perspective on like where price is trading at, so I can be cautious with my daily bias. Okay, I also want to tell you guys about something that makes your daily bias more probable or less probable. So let's say we are bearish on the daily and we are also bearish on the weekly. So bearish because we broke this low, breakout structure. Daily also bearish because we broke this low. So we are bearish on the daily and the weekly. So that makes it very interesting to look for shorts. But let's say the daily is bearish but the weekly is bullish, then still you gotta follow the daily bias, but you gotta be cautious because you know the weekly is bullish. So as I said previously, the weekly is just to give you like an indication on where the daily is trading at. So follow your daily price action bias, but take into account the weekly. If it's following your daily bias, then it's more probable. If the weekly is not following your daily bias, it is less probable, but I'm still taking setups and but just need to take that into account. Okay, but let's say we are in a range. We don't have like a clear daily bias. What do we do in this case? So as you can see, this is a high. We broke it, so we are basically having a daily bullish bias. So I'm only looking for longs, but we are in like a consolidation. So in this case, yes, more favorable to look for longs, but we are in a range, so we can just play from range high to range low, from range low to range high. What I do basically in this case is I just check the draw on liquidity. Whatever the best draw on liquidity is, that's basically my target. So if the draw on liquidity is above price, I'm taking longs. If the draw on liquidity is better below price, then I'm taking shorts. So let's say here on Bitcoin, we swept the lows here. We still have a nice draw on liquidity right here with a lot of buy side building up right here with a fair value gap. This is a lot of draw on liquidity for Bitcoin, for example. So that's why I'm also, this is double confluence. Daily is bearish, draw on liquidity is bearish. But I just want to tell you guys that the draw on liquidity is also a major factor in determining your daily bias, because wherever the most liquidity is, where the best liquidity pools lay, that's where basically price is most likely heading to. So that is also a major factor in determining your daily bias. One last thing I want to say is that this also just comes with a lot of market experience. So yes, you can follow price action like I told in the beginning of the video, just whatever is broken, high, low, follow that daily bias, and you can be very profitable with that. But you just have to take into account that this also comes with market experience. Because for example, there are some days where the daily bias is telling you to only look for longs, but there's something happening in the market, I don't know, fundamentals, there's news coming out, or just you see something that happened in the past, just basically all that have to do with market experience. And I'm not saying that you need to take everything into account, because that's not trading. That's how most traders fail. They just want to learn as much as possible, and they think that technical analysis will make them profitable, because that's not. But I'm just telling you guys that this just also comes with market experience, because there are some professional traders who don't trade when there's a choppy price action. I don't trade choppy price action, for example, because you want to trade in the most probable markets as possible. So for example, here Bitcoin is not looking nice for trade. So that's why, yes, the daily is telling buys, only longs, but you just don't want to trade this because it's just choppy. It's not nice price action, you know. So Market experience and intuition is also a major factor in determining your daily bias. So yeah, those are basically the three things. Price action, like I told you in the beginning of the video, highs, lows, break of structure, market experience and intuition, and whatever the highest trial on liquidity is. That's basically my three main pillars I look for determining my setups, my daily bias. So I hope you learned anything from this video. This is literally how I do this every day. If you still have any questions, just ask them in the comments down below. If you learned something, please like this video. I would really appreciate it. And I'll see you guys in the next video. Peace.